Joining the Closing Bell Exchange, we've got Andy Kapyrin from Regent Atlantic, Gordon Charlop from Rosenblatt Securities, and Rick Santelli at the CME in Chicago. Gordon, I'll start with you. Quite divergent performance in the markets this week. Do you find it impressive that the likes of the Dow and the S&P are up for the week as a whole, or worrying that the Nasdaq is down?
Well, it's been an interesting week for sure, Will. I mean, one of the things that we've seen is that stocks that haven't been behaving themselves nicely are getting punished, and that those that have shown nice numbers are getting rewarded. Overall, though, the VIX is rather unremarkable, and it's just been divergent with the market as a whole. So I guess, yeah, we're impressed with everything that's happened here today. The trend is still, the risk is still to the upside. And as far as we see it on the floor, you just got to be mindful of quick announcements, quick turnarounds in individual equities.
I mean, individual equities like Facebook, down 17% for the week. Twitter down 20% for the week, Andy. Can the overall market rally if the FANG trade collapses?
I think the overall market can continue to rally even if the FANG trade collapses. What we're really seeing with this earnings season is a big change in leadership. The biggest change in leadership that we're seeing so far is those companies that have earnings, that have fundamentals backing up their stock price versus those that have a lot of fluff and a lot of expectations. The only exception to that is Amazon, which continues to get a pass in terms of delivering profitability.
Do you double down on Alphabet given the difficulties some of the FANG names have seen this week?
So I'm a value guy, which finds me in an unusual situation recommending Google's parent, Alphabet. I do think Alphabet is worth owning. The reason I think it's worth owning is compared to the others, it is a much more mature company, one with more solid fundamentals, solid growth, and look at what's happened most recently with a lot of the regulatory brouhaha that Facebook has got itself caught up in. Google has handled that splendidly and frankly didn't do the bad things that got Google in hot water in the first place.
Rick Santelli, how are you guys digesting that GDP report out in Chicago?
You know, all yields are up solidly for the week, including the long end, I might add, because there was a time where the short end was even outpacing the long end by a quicker pace. But all in all, I think there was a little bit too much euphoria, a little bit pulled forward on some of the goodwill of today's number. And believe me, today's number was good. It's just they were looking for super good, and I think there was a little bit of disappointment. But on the week, rates are up. I would still be very surprised if we don't get much closer to 3%, considering we have a Fed meeting, Bank of Japan, a lot of important central banks getting together, a chock-full data week, employment reports. So I would think I was very pleased with the behavior. Listen, I think Steady Eddie is the best way to grow the U.S. economy. Sustainable improvement that goes up in a nice clip without stochastic, big ups and big swings and big downs. And I think that is the type of data we're receiving. I'm optimistic, but I'm also realistic.
Gordon, you said the risk is to the upside for the market. Do rates concern you with the Fed meeting next week, Bank of Japan? Is there a level at which you start to kind of reprice that risk to be?
Well, I mean, you're still at the spot where I think you're jumping off a snake's belly, so there's still ready capital available. I think the big issue that you have to look at now is sustainable GDP. And one of the things that you've got to be mindful of is this deficit that we're building. And are we going to start to see some infrastructure projects? So when we talk about the floor, we talk about earnings is where the rubber meets the road. We got to start to see the shovel meet the road, and then people will see that this is going to turn out to be something positive for the American people, and that will translate into November elections.
That's gonna boost the deficit even more.
Well, we're already boosting the deficit. The point is, can we get some of this spending to go into something that will be productive in terms of the American worker? We've heard some promises, but the electorate is getting, I believe they're getting frustrated by some of the activities they've seen from the administration. A lot of this has been translated to the big companies with tax breaks. We've seen a lot of activity in tariffs. The GDP is going to be a number that will continue to grow if we can sustain the policies of a pro-growth president and administration.
Andy, I know you're biased in this question because you're a value investor, but has the tide turned this week with some of the carnage we've seen in the highest growth names of the market shifting toward more value, or do you expect it to just reverse and investors to buy the dip on these growth stocks as they always have?
I am biased, and I'm going to answer this question the same way I always will, but this time it's going to be different because this is the turning point. The reason I think this is the turning point is normally in the past dozen or so quarters, if you've seen at least one of the FANGs faceplant. So far this quarter, 2 of them, and if you include Twitter, 3. It's become a much harder environment. They're no longer getting a pass from investors, and that means they have to actually create growth, real fundamental growth, most importantly in profits, not just in sales.
And what's your sector on that? The value sector? Which one do you prefer?
So I'd say as a sector bet, what I would prefer is energy.
I had a feeling you were going to say that. Second best performing group of the week, Wilford Financials were the top. Guys, thanks. Andy and Gordon and Rick Santelli.